This past Friday on October 24th, during CPI, I made $45,000 in one single day trading gold. Now, before you think this was luck or gambling, let me make one thing clear. Trading news is not gambling if you understand exactly where the market is intended to go. CPI is one of the most volatile news releases out of the entire month. And if you do not know how to navigate it properly, you will wipe yourself entirely clean and likely blow your entire account. But when you understand exactly how to read liquidity, you understand exactly where we are relative to the overall dealing range, and you understand time and price theory, you can position yourself before CPI releases, and this can become one of the biggest opportunities for you to make money during the entire month. In this video, I'm going to be breaking down how I caught this move step by step, what I saw before the news release, how I positioned myself, and how I managed to secure $45,000 in one singular day while most traders ended up blowing their accounts. Okay, so before we go ahead and get started, I do want to show you guys that I have 5 Express Top Step accounts that I was using to trade CPI. I did trade CPI on gold, so I was only looking at GC. Now, the reason why I only like to trade CPI on gold rather than trading NASDAQ is because I know, and this is statistically proven, you can go back and backtest on your charts, every time CPI comes out on NASDAQ, NASDAQ will manipulate before moving in the intended direction. Gold just rips straight off the bat. It does not manipulate, it does not wick down. So I knew that I would have a better chance of catching this move without any disruptions trading on gold. Okay, so here I have the gold chart loaded up. Now, before we go ahead and get started, I do want to make sure that you guys have something specific on your watch list in addition to gold, and that is going to be the DXY. Now, the reason why I have the DXY loaded up as well is because it is inversely correlated to gold. That means that in theory, if the DXY is going down, gold should go up. So from my understanding of macroeconomics, I knew that inflation was either going to be going down or stabilizing in this month, in this current period, which means that the CPI data should be dovish for the US dollar. That means that the US dollar should have been going down. Now, although I don't really pay attention to the news release too much, this did kind of help with my overall analysis, and it did align with what was already happening on the chart. So with my analysis, I was expecting CPI data to come out affecting the US dollar to go down, which means that in theory, gold should be going up. Now, if we go ahead and take a look at the gold chart, okay, you can see here, the only indicator that I ever use is going to be this indicator right here. It is market profile at Joshua. This indicator simply just separates my days. And then when I go down into my lower time frame, my 15-minute, it just marks out all of my sessions. This orange line simply represents New York midnight opening price. This pink orange box here represents Asia session. And then you can see here we have the London open kill zone, which is from 2 to 5. And then we have New York AM and then New York PM as well. It just makes it a little bit easier. I don't use any other indicators. This just helps me organize my charts every single day so that I don't have to do it manually like I was doing before. So the first thing that I do every single day when I get on my charts is that I clear absolutely everything. I'll click this trash button right here and I'll remove all of my drawings and indicators. And the reason why I do this, I don't like to keep my previous annotations, is because I want to go every single day onto the charts with a clear mind, a clear understanding. And I give myself about 20 to 30 minutes every single day to give myself a proper analysis of what's to happen. I can do an analysis a little bit quicker. However, I like to really spend time and analyze my charts effectively so that I can really make sure that I'm positioning myself in a high probability market environment. The first thing that I will do when I get onto my charts and I start annotating is that I want to mark out the current dealing range on the higher time frame. And I will be creating a separate video indicating exactly how to do this, but for briefness sake, I'm just going to go ahead and mark it out from this low up to this high right here. Now, the reason why I marked it out from this low to this high is because this is the lowest swing that is responsible for this entire push up. This low right here is our protected low. Okay, the reason why it is our protected low is because it is responsible for sweeping this liquidity that is resting beneath this low right here and then pushing us above this high right here. So it swept liquidity and is responsible for a market structure break above this high, and then is also responsible for putting in these highs right here. So this is our protected low. Okay, so this becomes our dealing range low, and then these become our dealing range high. Once I've marked out my dealing range low and high using my fib, I like to see, okay, where is equilibrium residing? Anything above equilibrium is going to be premium, and anything below equilibrium is going to be a discount. Now, whenever we are in the discount, in this scenario, we are in the discount, I want to mark out any internal range liquidity that could be potentially swept or has been swept already. So in this instance right here, you can see that this internal range liquidity right here to the sell side has already been taken. And we've been kind of consolidating going into CPI. And typically you'll see and you'll notice that ahead of a major news release, price will always consolidate. That is normal. We're just accumulating orders because there's a lot of uncertainty in the markets. People don't really understand where the markets are predetermined to go. So they're going to be buying and selling, doing, everything in both directions, which is likely going to lead them blowing their accounts. So if we go ahead and go into the 4 hour, you can kind of see the dealing range a little bit easier. You can see that we have this very large 4 hour order block that we traded into, and then we formed this large wick. Now, if I go down into the lower time frame, this large wick becomes my protected low. Okay, the reason why it becomes my protected low is because it swept liquidity right here, and again, it is responsible for pushing us above this old high, indicating to us a market structure break. So the current range that we are now stuck within on the lower time frame is going to be from this low all the way up to this high right here. Fast forward to Friday. Okay, you can see that the entire week, pretty much all the way up from Wednesday going into Thursday, and even kind of going into a little bit of Friday, we're literally just consolidating within this range. And just because we're consolidating on the higher time frame doesn't mean you can't take any trades. It just means that we're not going to have any aggressive runs like we had right here on Tuesday, where we kind of just melted all the way up from these highs. Okay, so now that we've marked out our dealing range on the lower time frame, we can kind of see, okay, what's going on here. Anytime we dip down beneath the 50% of that range, I am expecting price to push up. And anytime we are above the 50% of the range, when we are in a premium, I am expecting price to then push down. So going into Friday, during Asia session and going into London session, we had an aggressive push down, pushing us beneath New York midnight opening price. Understanding power of 3 of a regular candle or the daily candle, we can understand that on a bullish day, we want to see price dip down beneath New York midnight opening price and 1800 opening price, which is at 6 o'clock p.m., which is when the daily candle officially opens. That is true day open. I want to see price dip down beneath and then make its way back up. Now, how far are we going to dip down beneath? That's a great question. So what I can do is now I can mark out another range from this low all the way up to this high. And it marks out pretty similar to that dealing range that we already have marked out. You can see that the 50% actually marks out really nicely, almost right on the dot with the other range. And we can see, okay, what PD arrays, what lows, what order blocks, what fair value gaps, what is residing in the discount of the range underneath the 50%. We can see here that the Asia session low from the previous day is actually residing right here. And then we also have this very large order block represented by these 4 consecutive down close candles right here. You can see price pushes up, we come down, and we trade within this order block right here. And we also sweep this liquidity that is resting right here as well. I got onto my charts around 7:30 a.m. and I noticed that we had swept this intermediate low right here without closing underneath it. So this represents a failure swing low. So immediately I know that we are going to now take out this high that failed to put in a new low right here. On top of that, we have swept this internal range liquidity of this overall range, and we have traded into this order block right here that I outlined previously. So we have a lot of confluences that is telling me that, okay, we're going to likely push up. With that being said, okay, right at around 7:30, I noticed that we had swept this down close candles low, and then we displaced up higher, And I knew that right as we pushed through this candle's opening price right here, this down close candle's opening price, that we would have a change in the state of delivery. Now, unfortunately, I did not get in right there. I missed that entry right there. So I waited. That would have been a great entry right there. Unfortunately, I did miss it, so I did not get in. So I waited. I waited for this candle right here at 7:45 to close, and I saw that we had a small little fair value gap that got created right here. On top of that, we had this wick from the order block that we could have potentially traded within. So if you drop down into the 5-minute chart right here, I noticed that right at 750, we came and we rebalanced this entire displacement leg. On top of that, I noticed, again, we had already swept that liquidity that was resting beneath the previous 15-minute candle. So I got in right as we hit that fair value gap on that 15-minute, and we traded right around here. That is when I got in. I originally had my stop loss right here, but then I told myself, you know what? There's no need to have 60 ticks. I don't like to have more than 50 tick stop losses on gold whenever I am trading it. So I said, you know what? There's really no need for price to violate the low of this displacement leg. We are entirely rebalanced here. And if you notice, whenever we have an immediate down close candle followed by an immediate up close candle or vice versa on a higher time frame, that is going to represent wicks. So again, there's no need for price to come back and trade here. So I actually tightened my stop loss here. I entered with 2 contracts. I'll actually put a video in the corner right now showing my exact trade and executions. And I was originally targeting here as my first target. Ultimately, I did want to see if we could reach all the way back up into New York Midnight Open. Unfortunately, we did not reach all the way up there. We kind of stalled. We had a weak CPI. It didn't really move how I wanted it to. Okay, so again, I entered right here. My stop loss was right here. I entered with 2 contracts on each of my accounts, risking a total of around $500 or $600 per account. So a total of $2,500 risk across all of my accounts. And I kind of just let it play out. Now, going into the 8 o'clock hour ahead of 8:30 a.m. where CPI was going to be released, we started to consolidate, and again, I was up like maybe $800 per account right here, but I was okay. I knew that the risk going into this, I was targeting a large and significant amount of profits. I wasn't just going to exit because I was up $700 per account. I wanted to stick to my plan, wait for my trade to play out. And, it hit me break even a few times. I was up in profit. It came down into drawdown a little bit. But again, I did not move my stop loss. I waited. I was patient. And then ultimately, you can see right at 8:30, price just ripped up higher. Now, at the peak of this trade, if you saw in the recording, I was up around $6,000, okay? Typically, CPI will do one of 2 things. It will either continue to rip up higher immediately after, and it won't really rebalance. It won't really rebalance majority of this leg, or it will come all the way back down and then it will push back up. So because I was uncertain of what it was gonna do, I trailed my stop loss right at this candle's low. Unfortunately, if I keep replaying it, you can see here, I get stopped out and I made a total of $3,000 profit off of that initial trade that I had taken ahead of CPI. Now, I told myself, okay, I have some profits to play around with now. So what I did was I simply waited on the 5-minute chart for a few more candles to form. Okay, right there, right as I saw this liquidity get swept, right here, I then dropped down into my 1-minute time frame. I noticed that we had also swept the previous candle's low and that we displaced. Once I saw this displacement right here and I saw price kind of retracing, rebalancing that displacement, I re-entered my trade right here, again, risking another $500. And then I decided to target this fair value gap right here. And then you can see, boom, my target got hit. I made another $6,000 on that trade, totaling me for $9,000 per account or $45,000 total on this day. Very simple, very clean, very predictable. Nothing was gambling. I had proper risk management the entire time. I wasn't full porting my entire account. I wasn't doing anything outside of my trading plan. Most people use this as an opportunity to gamble. If you want to be a consistently profitable trader, you have to practice good habits every single day. You can't just gamble on a given day expecting to make a lot of money because that isn't going to generate you a consistent income every single month. Okay, you want to look at and view trading in the long run, in the grand scheme of things. You don't want to just view trading, today. How much can I make today? No. How much can I make over the course of a long period of time? If I'm consistent every single day, yes, I'm going to take losses. Yes, I'm going to have losing days. Not every single day is going to be a winning day. It's a game of probabilities. You might not have a 100% win rate. There's very few people, there's probably no one that has a 100% win rate 100% of the time. Every successful trader is going to take losses, but we understand that losses are a part of the process. They're nothing more than a lesson. Losses equal lessons. The reason why you're probably losing right now is because you're associating losses with negativity, okay? And because you are associating losses with negativity, every time you take a loss, you want to immediately make that money back, which leads you to revenge trading, which ultimately leads to you blowing your account. Take your time, follow your trading plan, and I promise you, you're going to make money. If you want to work with me one-on-one, you want to become a student of mine, I send my analysis to my students every single day. Again, I do not give out signals and I do not live trade. I do live trade sometimes with my students for educational purposes, but I do not live trade because that builds dependency and it does not allow my students to actually critically think and become independently profitable traders. But look, if you're struggling, you need help with psychology, you need help with risk management, maybe you don't understand trading at all, maybe you're a complete beginner. That is totally fine. I want to work with you. I want to help you grow and scale to your first $10, $15, $20, $30,000 a month through trading. Go ahead and apply down below. There's going to be a link in the description below. Again, there is going to be a 4-figure investment to become a student of mine. I'm only looking to work with the most serious individuals. I don't want you to waste your time and I don't want to waste my time either. If you apply and you qualify and you are a good fit to work with me one-on-one, I will be reaching out to you. I will contact you and I will see what I can do to help you. Again, the link is going to be down in the description below. I appreciate you for watching this video. If you learned something new, go ahead and leave a comment down below of what you want me to cover next, and I will make a video in regards to that. Leave a like, leave a comment, and go ahead and subscribe. More content coming out every single week. Thank you for the support, and I'll see you in the next video. Peace.